This is a 22R2 version. It just so happens to be what I had built for cash basis, but 23R1 will work in the exact same way. I usually explain when I start out with a demo, I do go in and I talk about the fact that this is a customization. So again, while that's not important to the customer, it's important to the partner to understand that they will need to maintain this separate from the base Acumatica version. We do, well, as we were developing, we were putting out new versions, once, twice, once a month or whatever it might be. You'll decide what your development schedule is and how you're going to deliver that. We had a page out in community where we would put the most up-to-date versions as things were going on. The partners could go out and say, oh, we've run into this issue. Maybe we'll just grab the current customization. The thing you have to be aware of is the always current program with Acumatica. More and more of our customers are in that always current program. So at least once a year, they're going to be pushed from whatever version they're on to the most current version. So what we run into is, for example, a 22R2 customer gets pushed to 23R1. This customization won't work with 23R1. And, keeping that up to date, getting the most current customization into the hands of the partners is important because, again, when that customer gets pushed from 22R2 to 23R1, which the partners should know well in advance of when that's happening and all of that, they would need to grab the most, the 23R1 customization to put out against that because this one will not work with that version. So that's just a thing to be aware of. In the enable features, there is a feature switch for cash basis reporting. This was added in 22R1. So if you run into anyone that is on a 21 version yet, this feature switch doesn't exist. It was added 22R1. We've been maintaining the lines in sort of a split manner. So cash basis reporting does need to be enabled. As I'm sure you're aware of the pay by line functionality, payment application by line. It is not required in the newer versions of cash basis reporting, but it is highly recommended. And we'll talk about why kind of when we get there. But I do highly recommend you turn this on. And this is where, again, as we get into discovery, from the beginning, it's important to know what state the customer's data is in. If they did not have payment application by line turned on, and they've been processing for a year, we'll talk about kind of what your options are or what will happen with those cash basis transactions. And then there's a whole process you can get into doing some manual conversions. But payment application by line is highly, highly recommended. And again, we'll sort of talk a little bit about that and why. So those are pieces under the features that we enable. If they're running payment application by line already, great. And that's why in that discovery document, we do ask that, are you using pay by line in these two places? I'll just sort of talk through, we mentioned briefly purchase order receipts, drop ships, why this can be a concern. If you're aware of Acumatica's purchase order process, if we're processing purchase order receipts, if we create a PO, we expense it to whatever expense account, we put it to a project, we hit it wherever. At the time of purchase order receipt, we are hitting the expense account and the other side of the entry hits a purchase order accrual account. And so when we put in that AP bill is relieving against that purchase order receipt, it's relieving that accrual account. So at no place on that actual AP bill is the actual expense account. That's why we asked this question about purchase order receipts, because this is one of the places where, again, if that's the process that they do, so we had a customer who extensively used purchase order receipts who had cash basis reporting, and it did not do what they expected it to do for that exact reason. The AP bill, and again, as we kind of talk through the processing here, which we will in a minute, as we're looking at the expense account on the AP bill, it's going to be that purchase order accrual account and not an expense account. So that's where we would be coding the other side of the entry from cash. if they do purchase order receipts for non-stock items and we can't clearly say, okay, let's say when they do that, really the expense side of it, of that purchase order is always hitting some purchases account. It's always hitting, or the vast majority of the time, it's hitting a specific expense account. Then great, we can use that mapping to say, I want to map this PO accrual account to my purchases account, and we're able to deal with it. If you say, oh no, we could be using purchase orders for any expense account, then typically the cash conversion process is not, and they do purchase order receipts, it's not going to end up where they want it. They're going to end up with a lot of reclassifications. And so that's one concern. And drop ships work in the same way. So drop ships run through essentially that sort of a same process where we would end up with essentially not that exact account, but sort of that same sort of process. So if we would get that and they say, yes, we do extensive purchase order receipts and they could be expensed anywhere, and then we kind of give them the, hey, cash basis, it's either A, we have to map that to one spot, or B, it's going to all hit your balance sheet and you're going to have to reclassify it. And again, that customer I was talking about, they predominantly bought everything on purchase orders, whether it was office supplies or anything. So it could have literally hit anywhere in their expenses. The cash conversion mapping. Notice nowhere in this screen is there a sub-account. So why that's important? Typically, we're taking a balance sheet account and we're mapping it to a P&L account. Typically, what we see, and again, this is the typical setup, and that's why we ask the question. Typically, what we'll see is that if a customer is using sub-accounts, they use a specific sub-account for balance sheet. So it might be like quadruple zero is balance sheet sub-account. But then when I get to the P&L side, I might want that to go to one of X number of sub-accounts. And so, again, typically when we're using sub-accounts, it's because we want to break out the P&L. When we're doing this mapping, if this is going to sub-account quadruple zero, this is also going to sub-account quadruple zero. It's not going to break it out to 1,000, 2,000, 3,000, all the, sub-accounts you might have that you use on the P&L side. So it's just something to be aware of. If they're extensively using sub-accounts and we need to do this type of mapping, which, we do, that they have to be aware of the fact that this will all dump into whatever sub-account is used on the balance sheet side. There was some thought process about trying to do something with this, but then adding sub-accounts here to say, okay, if it's this account sub-account combination, take it to this and this. But that doesn't, again, is that going to get you 100% of the way there? No. Could there be some sort of allocation? I want to take that and I want to allocate it across 5 different things. Certainly that's for you to consider developing out further. But just know that in the iteration as it exists, whatever sub-account was tied to this account will also be the sub-account in the resulting entry. That's why we asked that specific question about, do you use sub-accounts? And again, depending on how often they fall into some situations here, it could be a big deal or it might not be a big deal at all. If they're trying to if they don't care about sub-account reporting on the P&L cash basis, or if it's easy for them to further allocate manually or in some way, then not a big deal. But again, it can be a deal breaker. So it's just something to be aware of, and that's why we asked the question. So again, we go through, we set up those pieces. Also mentioned, as Doug mentioned, the ledger. Typically, the setup is that I have one actual ledger. That's not always the case, depending on how many companies they have. When you get into property management customers, typically you're dealing in the hundreds of companies. A typical property management implementation has like 50 to 100 companies, because typically each property is a company, for liability purposes. So they may not just have one actual ledger. They may have many actual ledgers. Regardless of how many actual ledgers that they have, you can only have one cash ledger. And again, as you walk into the customer and, we're doing a demo of this, it's always important to understand, do they have one actual ledger or do they have many actual ledgers? Because the way Acumatica financial statements are built, the ARM report, you can specify a ledger in a column set to report different ledgers in different columns. So you may sometimes run into, and I've run into it probably maybe once or twice out of the, 30 implementations that I've done for cash basis, where they had multiple actual ledgers, in which case, we do have to write special financials for cash basis. But 99% of the time, I'd say you're going to see one actual ledger. And again, you can only have one cash ledger, regardless of how many actuals you have. Again, our coding only allows that one to exist. And it is marked cash basis here, and only one can have that. And again, it's a reporting ledger, just like, anything else, like your budget ledger or whatever it might be. And you specify what companies you want to use this ledger. So, if you had 10 companies and only 2 of them report cash basis, you might only choose those 2 companies. And those are the only 2 where the transactions would show up. So it doesn't have to be an all or nothing. Sometimes you'll have a large corporation and then they have a couple little service companies. Or again, as you get into property management, you might have a construction company and then they have a couple of property management companies. The construction company might be too large to report cash basis, and so they don't need it for that company, but they might need it for their smallers. So when you set up the ledger, you specify what companies you want to use that with, but you can only have one cash ledger. All right, and then our mappings. So our clearing account mapping, I always start with that one because that's the most easy. Again, we map our clearing account just like we had under our banking. If an account is marked clearing account, we're going to be using that. And typically, that we would go out and we would map that specific clearing account to its specific cash account. And again, I'm only using that in receivables. If you were using a clearing account on the payable side, you could do that as well, but typically we don't. On our cash conversion side, as we mentioned, any overpayments or open payments by customer gets mapped to a revenue account because, again, my AR account, which is what this is, does not exist cash basis. So I need that money to go somewhere on the P&L. One of the other required mappings is going to be if I'm using sales tax. So if I'm receiving sales tax, if I'm receiving money against sales tax, I need to know where do I want that to go. At one point, we forced it to go to the P&L, and then we had customers who were very unhappy with that, and they wanted to be able to control where it went. We gave you the ability to map it to itself. So I want this to stay on my balance sheet. I want to be able to see when I have an AR. So if I receive money from a customer and part of that is paying sales tax, I still want that to stay in my sales tax liability. But this is a required mapping. If it's not here and that AR invoice has sales tax payable, that transaction won't convert. It will error because it doesn't know how to deal with it. So it can be mapped to itself. So that was tax payable. But you can map it to itself, or we could say, I want that to show on my P&L somewhere. And again, we used to force this to be a P&L account because we called it revenue and expense. And then we had some customers say, no, we want to be able to put things to the balance sheet if we want it there. Then we put it here. So the only things that need to go here are where I would need to essentially do this find and replace. As we go through and we try to explain this in the implementation process, they're like, well, I need to map every single GL account. No, this is only for when I need to replace the account that is used as the offset to cash, and I want it to go somewhere else. So I'm going to drive that to a different account. And that's what we do here. So we set up those pieces, and then everything flows through the system as normal. So important to note, as I mentioned, pay by line. Pay by line is highly recommended. It used to be required. So if you run into any customers that are on older customizations, because a lot of the customers don't upgrade, they stay on whatever customization they were on. The partners aren't putting them on the latest as we're releasing them because either A, they don't know about it, or B, if it's not broke, don't fix it kind of thing. When we go out and we set up our vendors and our customers payments, pay by line. If I take off pay by line, or I don't have pay by line put on a vendor or customer transaction, this is the message that you will get now on the more recent version. So pay by line strongly recommended for more accurate cash basis income and expense reporting. Let's talk about a little bit about what happens when I put in a transaction. So I'm going to go out, and again, I'm just going to grab a transaction. So I've got this open bill here. I'm just going to go ahead and pay this. So pay by line is turned on here. So this transaction is pay by line. I've got multiple lines here to see. Okay, no payment's been done against it. If I go out and I pay this, note that I've got my lines, and why this is important. When we go out and we do cash basis, we do this conversion process, we are looking at this payment. From the payment, we are looking at the lines of the AP bill, and we are finding these GL accounts / sub accounts / project / task / cost code, and I'll put all of that in there because it all matters. In our case, we're just looking at the account because I don't have sub accounts enabled, and these are going to project X. And it's going to look at this bill, and that's where it's going to grab, where do I put this cash basis? So I'm going to just, we're just going to go ahead and process this check, and we'll push this through. So when I go out and I release this check, so when we put in that bill and everything along those lines, nothing happened cash basis. So I release that payment. When I go out to my cash conversion and I choose my current month, I'm going to see this transaction show up. Again, I can see my accrual batch number here, and it's going to convert 1 for 1. So every accrual batch is going to get a cash batch. So I've got this accrual batch. When I say go ahead and process this, it's going to now go out under my journal transactions, and it's going to create this cash transaction. So I had 1 accrual, I get 1 cash. Couple of things that change in the customization. We add these fields as well as this field. So these fields get added, and that's why it's important that in the discovery we asked, you have any other customization? Well, it says needs that are relevant to this part of the project, but it's also important to know, do they have any customizations already existing? So if they had a customization to this screen already, sometimes these things will get messy in terms of where they show up, because we're coding it here, and if they already have something coded there, this might show up mixed in amongst all the other things that they have. So it's important to know what's kind of going on. But we're saying, okay, this is a cash basis transaction. It matches to this AP payment. So if we remember when we looked at that AP bill, that it was being coded $1 here and $2 here. And again, these are just some random GL accounts. Don't worry about what accounts they're going to. But we looked at that bill, we looked at that payment, we found the line that it was tied to, and we were able to find the GL account. And again, sub account, task, project, cost code, whole 9 yards would be, would be the same. It would pull it through. So we look back at that using pay by line. If we put in a transaction, or if I went out to payables now and I chose a transaction that was not marked pay by line, as this one is not. So notice you're going to get the little warning that, hey, you don't have pay by line marked. We are not going to look at the lines of this AP bill to figure out where does this go. Because again, when you don't have pay by line enabled, I'm not paying these lines. I'm paying part of this. Right? So I only have this $1. In the background, when we have pay by line turned on, there is essentially a balance per each line. We know how much has been paid per line. In this case, when we don't have pay by line turned on, it's essentially like the lines don't exist or don't matter. We're just saying, I'm paying some chunk of this money. What they're paying, we don't know. So what we had elected to do in order to accommodate transactions that were out there that were not marked pay by line at the time of go live is that we had made a decision that instead of looking at the lines, if pay by line's not turned on, we're going to look at the vendor, and we are going to look at, no, this is an employee, but we would look at the actual vendor record, and we are looking for this expense / sub-account combination. And so for every AP bill that is not marked pay by line, we are going to code that to the default that's on the vendor, account sub-account combination. This is not a required field. Neither of these are required on the vendor. If these are blank on the vendor, then the transaction will fail when we try to convert it, because it's going to try to look here and say, what's here, and then I don't know what to do because I don't have a spot to put it. So it's important to note that pay by line is going to look at the lines of the AP bill. And again, if I'm paying line 1, it's going to look at line 1 and say, what's my account, sub-account, project task, cost code? If it's not pay by line, we're looking at the vendor. And this may or may not be filled out. So that's why, again, it's important to know when we get into this, whether the customer is live or not live. Because if the transactions are not marked pay by line, this is what's going to happen. This AP bill, if we look at vendors, we look at any bills related to this vendor, may or may not have this combination on there. It could be, anything really, because at the time I put in the bill, I can code that anywhere I want. But we're going to use this. And that's why it's important to know whether the customer has transactions in the system or not. So that's important to understand, and I always point that out in a demo of if it's marked pay by line, great. We look at that payment, we look at the lines, because I've got that connection. Pay by line says I paid this line of this AP bill, or on the customer side, the customer paid me this line of this AR invoice. I'm able to make that connection so I can find that account. When we don't have pay by line enabled, we don't know what that is. You're just paying a chunk of this money. That money could have all gone to one account, or it could go to many accounts. And that's why it's important to have that discussion ahead of time if the customer is live and they've been live for a period of time. How far back are you trying to go? Unfortunately, what happens a lot of times is customers coming from other systems make the assumption that cash basis already exists in Acumatica because their system had it. And so they get through to the point of being live, they work for multiple months, and then they, suddenly realize, oh, where's my cash basis financial statements? And then that's when, we would get involved, and they'd be like, okay, well, we've been live for 6 months and I need to go backwards and I need to convert all of those transactions to cash basis. That's why we made this change of not requiring pay by line, but making the decision to look at the defaults that were put on the vendor, or on the customer side, looking at the defaults on the customer. What I always tell people is it's not going to get you an accurate P&L in terms of accounts. It'll get things into the right buckets from a historical standpoint. So because your revenue account and sub-account here are required, these are here. So these will always be there. They have to be. I'll get all my revenue going to revenue. But again, I could have when I put in a bill to this customer, it could have gone to any revenue account. If I have many, it could have been, I could have 15 different invoices to this customer that went to 15 different revenue accounts. But when I convert it to cash basis, everything's going to this combination. And that's the piece of historically of going back and converting transactions that existed in the system where that can be problematic. And then the last piece I usually show would be on our financials. So if I took a P&L, and again, I sort of briefly show this, that when I'm looking at my report definitions, I can choose to expose that ledger parameter right here. So if I say request, then that gives the ability for that ledger to show up there and for them to select what they want. Again, if you have one actual ledger, this is your situation. I need, I want to run actual or I want to run cash. It's just a choosing a different dropdown. If you have, again, if the customer's live and they have multiple actual ledgers, then we have to consider building specific cash ledgers or cash basis financial statements where I'm pulling this cash ledger through. And again, I don't see it a lot, but I've run into it a couple of times where there is more than one actual ledger. It can be this simple, or it might be more complex depending on what already exists. If they're already live, they're already using multiple actual ledgers, then I have to create a cash ledger where I'm pulling through that piece. But it can be this simple, just go in and switch. Now I've got my, my P&L. So here's my $3 in expense that hit as a result on my cash ledger because I converted that transaction. As I mentioned in the journal transactions, I always like to show this as well. Any transaction that affected cash. So as we saw when we put in AP or we put in AR, or if I would come into banking and I do a funds transfer or cash transaction where I was recording bank fees or whatever it may be, those transactions will all show up for conversion here. But if I'm doing a journal entry, as we mentioned earlier, maybe I've had, we had some issues where things were getting coded on the expense side and I need to, move something. Maybe they put it to other expense because they weren't sure what to do with it. And we need to move that. So maybe I need to take $100 or $1,000 out of this account and I need to put it somewhere else. They had coded it here. Maybe it's a lot of AP bills. I don't want to go through and manually reclassify each one of those. Maybe it went to supplies. Just pick an account. So let's say accrual basis, I'm hitting my actual ledger here. I want to make this entry. Neither of these lines are cash. So if I go out here to my cash conversion, guess what? That transaction doesn't show up because it's not affecting cash. If I go out to September, not here. But it helps if I release it. Anyway, still wouldn't be there. But notice my, as we call next logical action here, says create cash basis. So I can see this is marked accrual. And we could say, yes, I also want this to affect my cash ledger. I could certainly also come in here and hit my plus sign and choose my cash ledger and make an entry just to affect cash. But if I want that connection that shows me this is my original batch number and it tied to my actual cash basis batch number, then I can hit this button and do that transaction. Notice that it automatically releases. And that's another setup that I'll mention. It automatically came out and it's posted, it's released. We have set it up to do that. I'll mention this because it's important to know. There's also, when you enable the feature switch on the enable features, it will also enable this switch and it will disable hold batches on entry. So when I'm putting in a journal entry, it does not automatically show up on hold. It goes immediately to a balance state. And that's because of the fact that we can't mass release things that are on hold. You have to hit them one by one. So these transactions, when I generate them, they're automatically released. If I looked at this batch number, back up here, actually, I'll just grab it because it's the last one. we can see this box gets checked. When this box is checked, this transaction will not show up for cash conversion again. And this is the flag that says, hey, this is already being converted. I don't need to deal with it. From an implementation standpoint, cash basis is pretty quick. It's not going to add, it's going to add hours, not days, to the implementation. If we're looking at a customer who's not already live, we typically take this towards the end of the process because we need transactions in there certainly to convert. If the customer's already live, we usually recommend doing this in a test system first, getting all the setups, because again, you're looking at 3-4 screens in terms of setting things up, letting them play with it, because pay by line is a different functionality than what they're used to make sure that they understand what happens when we do pay by line versus what happens when we don't do pay by line. Once they're comfortable with creating those transactions, running the conversion process, things are going where we want it to go, then we essentially do they can take those same setups and put them into the live system. Because again, we touched a handful of screens that should take 10-15 minutes to duplicate, even if you have tons of transactions. The other thing I like to point out, again, when you're looking at big customers or customers who have a lot of companies, this screen, we can export this. You can drop this to Excel, create what you need to do. This shouldn't be a tremendous amount of effort to duplicate what you did here in test system into a live system. So typically we're looking at, I think we were quoting it at something like 7 hours. So it's not a tremendous lift. It's not a tremendous effort. It's really getting the customer, we go over all the setups. We essentially set them up. This is typically the piece they have to take away, do for homework, figure out what we need to do. And then we kind of set it up from that standpoint. But like I said, there's not a lot to it, but there's a lot that happens in the background.